Hi guys, and welcome back to another episode. Today's episode, we're going to be talking all about accounting and finance management in business. When it comes to accounting and finance management, it's so important when it comes to navigating your business. If you don't have a good view on, where money's coming from, where money's going to, your finances, it's very easy for you to lose control of your business. Also, having a good understanding of your profit, your loss, your expenses would really help when it comes to strategically planning for your business. So I'm joined with an awesome guest, Fola, who is an entrepreneur and also an accountant. So we got the best of both today. Why would you say it's important for people to have a good view of their accounting and finances in their business? What would you say the impact is on businesses when it comes to that?
I mean, you have to consider the finance of your business almost like the lifeblood of the business, like the veins and the arteries of your business. Because, let's be honest, without money coming in, can your business actually function?
Exactly.
And also without money going out to the correct suppliers, and so whether it's you've got business premises, whether it's business rates, whether it's the taxman, whoever it may be, money needs to continually exchange hands. And so you also need to look at the point of view from, okay, are we able to fund the marketing budget? Are we able to, even things as simple as are all expenses for admin taken care of, whether it's that's like issuing things like invoices to things like stamps and stickers, and just being able to operate on a day-to-day basis. So I think it's really important for you to be able to know what's happening with your business and with finances, because then it enables you to plan. If you understand trends, for example, if you understand how your business works, so you might, for example, your business might be very seasonal, so it might be between the summer months, it might do really well. It might make up maybe 80% of how much you make during the course of a year. So looking at your numbers, that will enable you to know that. So it's not just, I don't mean just looking at your bank account, I mean actually looking at your numbers and knowing what's what. So from, that's things like having like an income and expenditure template, a profit and loss, a balance sheet. So, obviously aside from the operational things, what does the business own? What does the business owe? How liquid are we? Can we cover what we owe? Do we owe a lot? Do we owe a little? You're able to look at your business from that perspective. And also, like I said, if you want to, invest in a certain thing or take on a certain project, can the business afford to? Can it even afford to pay staff at the end of the month?
Yeah, exactly. I do find that sometimes people know that money is coming in, but because they don't have that good overview, they don't really know what's going out. And so it's like, okay, are we actually making a profit? Are we breaking even? Like you said, do we have the finances to be able to expand, for example, or invest, like you said? So that's really great. I mean, you've touched a bit on like balance sheets and things like that. What other ways would you say people can keep a good record of their finances?
So there's various different ways. I mean, some people are a lot more traditional and they like to write things down, and they literally like to have records. So like a record book, which stays in like a safe or a cabinet, and they work on that. Or some people just literally do the traditional Microsoft Excel. I've already got it on my computer. I'm going to use a spreadsheet, which is absolutely fine. And a lot of organizations tend to do like a freeway, so they have like things that they get on paper, so whether it's invoices, whatever, and they they keep that record. That even though they scan it onto a computer, they still keep an actual physical record of it. Then they have the systems in which they work off, so it's whether SAP, Oracle, QuickBooks, whatever, Sage, whatever you want to call it. And then they also have Excel. It depends on how you are. If you want to subscribe to having a package, an accounting package, which obviously a lot of the times it's a lot easier because you just need to feed in the numbers, and a lot of times it does the calculations and everything for you, so it kind of limits your job. You're just kind of like a feeder, and then it kind of just works everything out and presents it in a way that you can that's easy for you to understand.
I think just to take this a step further, in addition to having the accounts it's important to actually review them on a regular basis, to see where you're at, to see what's working, what isn't working, how much is coming in, how much is going out, if you need to make any changes, if you were making a certain amount or spending a certain amount in the previous quarter, what can you do differently in this quarter or the next quarter? It really just helps you to plan better, and also be strategic in the way that you maneuver.
And even from a kind of a personal perspective, I mean, I'll take myself as an example. I think you have to consider, like, some people check their accounts quite often and some people don't, but someone like me, I check my account like 15 times a day. Don't get me wrong, the balance is not moving it's not moving up, usually moving down if I've spent on it, but it's not by God's grace it will move up. But similarly, I'm not saying that you need to check your business accounts every 2 minutes or whatever. Especially as an entrepreneur or a micro or small business, like what you want to ensure that you're doing is you want to check your accounts regularly enough to know what's happening with your accounts, and even do, like I said, like you rightly mentioned before, like do like for like comparisons for either the week before or the month before, the quarter before, the year before. It just enables you to kind of like know how you're doing, how well you're progressing, how well, like not just on the operational front, but also from a finance perspective. Like, okay, we're saying we're growing because we're reaching this many more customers, or we've got, we're selling this much more products. But does that also reflect on your finances? And that's why I said in the beginning it's a 360 view, but the finance part of things is very, very important. So
it's true. You could be making a lot more, but also spending a lot more. So then what difference has? I get that. That makes so much sense. So just in touching on, the personal account, the business account. Kind of what would you say, or what advice would you give people in terms of keeping those accounts separate? I
think with regards to like separation, I think the biggest problem is for like entrepreneurs and micro or small, maybe medium-sized organizations where you've got a founder who's very heavily involved in their business, or you've got a founder who the business is not even just heavily involved, but the business revolves around them being the kind of visionary behind the business, etc. And what tends to happen is there's a lack of separation between the two. So personal expenses are made on business, etc. And obviously some people try to make out that, oh no, it's not much, it's only maybe 2% of our annual spend or our monthly spend, so I can just say that this was going for this and blah blah. Listen, integrity is an important thing, in business, because once you start bending rules, like it's easier for you to bend rules on bigger things and bigger expenses or bigger levels of income and whatever, and it just breeds a bad habit. But ultimately, the most important thing for anyone who's whether you're an entrepreneur or if you're a small micro business owner, is that you have to ensure that it's a mindset thing, that that my business and myself are two separate entities. Under eyes of the law, your business, unless you're a sole trader, your business is a separate entity to you as a person. So I should keep my personal expenses under my own personal accounts or personal account, and also as well as income, and same for the business. Anything that's going through the business should be business income and business expense. It's as simple as that. And once you kind of condition your mind to know that although I'm the founder of this organization, the organization's its own entity, and so I'm going to serve it as its own entity. So I'm not going to be doing boohoo, misguided, Afro Nation, trip to Dubai on the business when it shouldn't be. Do you get what I mean?
Because that's so true. Because also even when it comes to tax purposes, you do need to have that business account separate to your account as well.
And I think a lot of people forget things like even the repercussions for doing things in the wrong way. So whether it's like trying to understand, okay, what your expenses are during, like for times like this, we're currently in a pandemic, and you might want to apply for grants or loans, or like you said, for tax purposes.
So I guess this is a good segue into talking about paying yourself from the business, because I do know that it's a tricky one for some people. Although you are the founder, you work for the business. So how can people go around paying themselves and deciding what to pay for themselves, and are there like tax implications for that and stuff?
I mean, yes, absolutely, there are tax implications, and I think there's no one size fits all answer, because it just depends on how your business is set up. So obviously if you work for your business as a director, then there's things like you can pay yourself either through PAYE or combination of PAYE and a dividend. So it just depends on on that scale. If you've taken yourself off directorship from when you first founded your business and said, oh, I'm just a consultant or I work for the business, then you can either pay yourself via PAYE as an employee for the company, or you can pay yourself as a contractor. It just depends on the way your business is set up. All of these ways are ways that are not frowned upon. However, you want to pay yourself in the best way that's suitable to you, and obviously suitable for the tax implications for the business and for yourself. Some people register themselves as self-employed and serve themselves that way, in the sense where they'll contract to their own company and then pay themselves via an invoice, and then they sort out their own tax themselves via self-assessment. So it just depends. I mean, there's various different ways, but I mean, if you work in that capacity where you kind of you're like the lead, the mind behind the business, then I would say usually you should ideally go for like the partial PAYE, partial dividend route. The reason why, because for things like when you want to make large investments like mortgages and stuff like that, it's easier for them to kind of track and trace and see if you've been paying your taxes over the years, all that kind of stuff, and that's what the banks would want to see. I mean, that not only for that purpose, but also at the same time, it helps build your business's credibility, because it's seen as a company that's not just whacking chunks and chunks of money at random different people, but we can see, let's say for example, your business is registered as PAYE, your business has a business bank account, and so as much as you as a person can build credit, your business can also build credit, because let's say for example your business grows exponentially and you want to acquire a space, and you want to, and maybe let's say for example cash flow is not that great, but you want to get some sort of loan from your business bank, whatever. They want to see how credible you are in terms of do you have income coming steadily, regularly? Are you usually over and above your head with your normal business operations, or or not? And they can see how well you've managed your money, because obviously your bank account's with them, and then obviously that way they can make decisions and say, do you know what, this person's been fantastic over the years. We've seen that they pay their staff through, I don't know, PAYE. They're never in and over their heads with things. They're quite sensible in the way they've managed their money. We can see there's no random funky expenses going through everyday McDonald's, everyday Harrods, everyday this. Do you get what I mean? And so that way they're able to make an assessment, and obviously when it comes to it, they can support you, and you can obviously further your business in ways. Credit's not necessarily a bad thing, but that's a story for another day. Yeah,
that's good.
Yeah,
thank you. Another thing I wanted us to talk about was pension.
Oh yeah.
Because I think obviously when you work in an organisation legally, they're meant to enrol you into a pension scheme, but sometimes entrepreneurs don't feel like it's necessary for them to do when they're working for themselves or they have a business. And obviously that is the thing that you have to fall back on when you retire. Obviously we're all praying that we make $1 million and retire, or billions and retire.
I should have made $1 million by last year, but
we make billions and retire. We don't need all of that stuff, but can you just talk about kind of the importance of setting up a pension scheme for yourself?
It's very, very important. I mean, there's a reason why in the UK the government has set, and many other countries the government sets like retirement working age, because they know that after a certain time the body just needs to rest. You've given it all you can, and then now it's just time to rest and enjoy the fruits of all the time that you've been working. So I feel like on both ends, I'm never going to say that it's never important. It's critically important. It's vital. I mean, there's also ways for entrepreneurs to kind of enroll on a pension scheme where you can track and manage things yourself, or you can also go into like pension schemes which obviously are tracked and managed for you. You just have to pick what kind of things you want your pension to be funded against and all that kind of stuff, and you just make a monthly contribution. Because obviously as an entrepreneur or small business owner, you obviously your mind might not be that way inclined, and might not have the time to be tracking and looking at what can I put my pension fund towards and tracking it and blah blah. So you might just want to put it in a pot with a really good pension provider who will pretty much kind of ensure that it's looked after you over the course of your contributions, and then when you come to the end of it, you get either a massive lump sum and then a recurring payment every month till your whatever age, or till you pass away, or however they decide to do it. But over and above everything I've just said, it's important for whether you're employed in a self-employed or a business capacity, or you're employed as an employee. A pension is key.
Absolutely. Just having that fallback, and that it's there for you once you're retired. And yes, even if you become that millionaire, billionaire, or whatever, it doesn't hurt to still have this, because it is only a monthly contribution. Like, you might not even feel what's coming out of your bank account every month, and at least that you have that safety net at the end of your working life. So I mean, we've touched on quite a few things, which has been fantastic. I just wanted us to speak a little bit on financial planning, and the importance of that, and how people can do that.
And what businesses should do, at least, if not every quarter, at least twice in a year, is to look at, okay, what did we aim to do at the beginning of your financial year? And when I say financial year, I don't necessarily mean January. Your financial year could be July, it could be April to April one year to April the following year. However your financial, whatever your financial year looks like, and you should always be like, okay, at the start of the year, what's our goal? What are we planning to attain or achieve? And then, at some way through the year, maybe it's like I said, a quarterly thing or a biannual thing, and you get to halfway through the year and you think, okay, by this time we expected to achieve this. We have achieved it, or we've exceeded this, and we've exceeded it, and we're surprised, or we've met it, or we're falling behind. And you want to look at the reasons why on each occasion, or in each scenario, why you've hit it, missed it, or exceeded it. Even obviously with the pandemic now, you might have had dreams and you think, I'm far away from where my dreams are. Obviously, kind of have a review and look at why, rather than just boxing yourself and saying because of pandemic. Because it's so easy to just say, pandemic! But what you want to do is look deep and be like, okay, look, what was hit during the pandemic? Was it customer orders were hit? Did we market enough? I mean, we knew the pandemic hit, but did we stick to our marketing budget? Did we underspend? Did we, were we understaffed? Were we blah blah? And look at things and look at the things that impacted what the outcome became. But yeah, I think in terms of like budgeting or in terms of like financial planning, you always want to kind of see, okay, it all starts from what are you trying to achieve, what are you trying to attain, and then obviously kind of have some sort of justification as to why, or not even justification, just understanding the reasons why you have or haven't met where you are. And then also maybe just it gives you an opportunity to review it and say, okay, I wanted to, I started off with £1,000 in a business, and I said I wanted to hit £10,000 or maybe £100,000, and that might have been way too ambitious. So it might be like, okay, and a month by month we're getting 5k even through the pandemic or whatever. So in your head you might be like, okay, there's 12 months in a year, maybe we should have aimed for 60 or 50k rather than 100k. Do you get what I mean? Because it's like, as much as you're ambitious, you're kind of, if you look at your growth has been like steady. It's never been like exponential. Do you get what I mean? So you might have overshot. So it might give you the opportunity to say, okay, hey, this is what we envisioned or anticipated. However, we were unrealistic with that, as well, or we were just over ambitious with that. Not even unrealistic, over ambitious. But we can see that, okay, with the strength, with the energy we've put in to try and attain our goal, we can see that we are seeing growth, but that growth is a bit too far out of our reach, and then obviously you can readjust and whatever.